Hello, it is the 15th of December 2010. Welcome to today's silver analysis. And in this video, I'm going to focus on failed moves. And that is oftentimes when you get failed moves, it can create fast moves. Thank you, Brian Shannon, for bringing that up. Because ever since he's been saying that and I see it, I'm always on red alert whenever I see something like this that you could have that big move lower. This was a failed move going below this 10-day moving average. And what happened? It got up and had a nice little gain. But as far as failed moves are concerned within the Fibonacci retracement, we can take these intraday highs of 30 and 3/4, or the 24/7 highs that they had during the Asian markets, and then the lows, which also hit 28, but not on this chart. Therefore, the Fibonacci levels I was bringing up was the 29 handle for the 38.2 and the 29 and 2/3 for the 61.8. And it found resistance at the 38.2. That's old news, but it's Fibonacci news. And it got above it here, and it stabilized within this level. Had a little move, which actually got up even a little bit higher, and then that brought the failed move down below in here. And in order for this selling to become that of a failed move, it really needs to get above this 29 and 2/3 level and hold above it. Because that hasn't happened yet, the sell-off that occurred from the 30 and 3/4 mark down to 28 is still not a failure yet. If it does manage to continue going higher and then really realistically test the 30 to 32 area, then it would be an obvious failed move. Now, as far as the Fibonacci from this bottom at 28 and this high, which happens to be 30, we can use the Fibonacci just by using the simple math. Every dollar within the Fibonacci is 61.8 cents, and we'll say 62, and we'll multiply that. That's around $1.24, and we'll even round it to $1.25. Therefore, we subtract $1.25 from 30, which gives us 28.75. Therefore, for this rally from this sell-off to become a failed move, it needs to break below 28.75 and then either stay below it for a while or make the move down to 28. If that's the case, then this rally is the failed move. Which one will it be? Well, I don't know, but overall, the market does need time to digest the gains that it's had. And if we end up ranging between 28 and 30, there would be nothing wrong with that whatsoever. But at the same point, we've also had a few days to consolidate its previous gains, and because of that, it's enabled the 5 and 10-day moving average to start to flatten out, trade above and below it. It's enabled us to go below this trend line and also trade above and below it. And because of that, that can make stuff like the Bollinger Bands that say, hey, wait a second, we are way overbought here. Then okay, so we'll sell off. But now that if we get up to this level here again, the Bollinger Bands will say, yeah, you know what, we can go up a little bit more, as that would be what a time correction within the market would give us. Now, as far as the long-term trend is concerned, we have a long ways to go to really take any bullishness away from this market. On an intermediate level, 28 is the big level for us to hold. And I think on a longer term level, or the level after the intermediate level, a hold of the 50-day moving average. And really 26 and change right now seems to be a level that I think would be a nice little hold. If we manage to go further below, then when that time comes, I'll bring up some Fibonacci stats that I don't have on the top of my head with me right now. But, however, because of this 5-day moving average, which was declining for a short period of time, it got above it, and now it's going below it. So if we are going to be moving into one of those neutral markets, then this is very normal activity, but it was very bullish to go below the 5-day moving average for a brief period of time and then recapture it. but it's also very bearish to get above the 5-day moving average like this and hold it for a quick or a quick little period, that is. So thank you for watching this video, and have yourself a great day, everyone. Bye-bye.